I mentioned earlier today that I want to find it. That basically, the longer that we're going to go sideways, right? Uh, I could try to find it, but I'll just talk about it. The longer that we go sideways, the greater the odds that we're going to basically trend out of this. And as you can see, if I do find this chart from earlier today, there it is. We have a mature balance. I just like to get all my zones out of there so it's really clear. And then we have a high volume indicator here with basically price hovering right around this. So we were basically drifting sideways until this news event. The news event's very risky to get in on. So I'm glad I had a runner to participate because you could see I had the right entry, but I got out too soon. For at least for the ES. I won't talk about it's kind of crazy that I can talk about two markets at once, but I'll only talk about one because all these things are the same to me. I don't really see a difference in them. It's crazy. Regarding the principles. But as you can see, one of the principles is that as things mature, the greater the odds that we can launch from it. We had market moving news. So there's two out of I don't know how many pre-market conditions. And also we're oscillating around a VPOC at this moment. So then this would increase the odds of a trend, especially if we're just going to go up and down around it. So the high volume node would be from here to here. That's the node. And then the VPOC is the actual red line. So I didn't actually draw that red line. That's the actual indicator. Now I don't think you can get that in the free version. This is the pro version, but there's a lot of useful things that actually will definitely make up for it if you want to if for those out there that just have the or trying it out for free, I highly recommend it over TradingView over other platforms, including TradeStation. So we're gonna Harold's coming in. There we go. We just had someone coming in. So as you can see, Bitcoin could just chop around in a tight range until the FOMC meeting. Um, yeah, and that's what it did, but it didn't mean the execution of it was any easier. Now in the overnight, fine, Bitcoin very very tight range. But you can see that Bitcoin's also suspect of the FOMC now. It's not just everything is. So if you had orders there, you got destroyed. Remember, the yellow zones are the weakest zones. You could pretty much skip those zones. You could have an edge where say, hey, I only fade Matt's blue zones. You could have had a resting order middle to the back. This was tough to catch in real time, right? You had it. If you didn't have a resting order here to get this in real time, this would have been you had to be right at the screen. I wasn't even at the screen at this time. But the cool thing about the Fed is that I kept that Bitcoin runner in, and yeah, I exited maybe a little bit too soon for the Bitcoin runner, but I didn't feel pressure to re-enter here again. But the zone was on point. These are one of those things where I say don't wait for confirmation, buy it when it looks scary. But when you're getting action reaction, it's like you see the tail, uh, it might not come down again. So you get the false breakout into it. But this is a Fed meeting. I'm 30 minutes before, 30 minutes after, it's fine not to trade it. I didn't want to execute as well. I just like sometimes when I see a zone workout that I made ahead of time, you get a little FOMO, but that's why you keep that runner in. So I actually do have a little bit of FOMO that I actually got out a little too soon without logging into my account. Let's see when I posted this chart. Yeah, yeah. I just I get out ahead of the major zones. Like I know it could probably pop up soon, but then I'm going to be teaching and then looking at my two other screens. I turn my other three off right now. I'm going to be teaching, so I just cashed in. I'm more of an intraday guy. I can get in again, but yeah, I held this for a while. This was since Friday or whatever. I gave the limit order that week or whatever, but cashed in with the runner didn't happen. So yeah, so then it frees me up to trade the ES, which had a good entry. So yesterday was the really solid entry in the ES. There was an entry today at when did I give an ES entry? Let's see. Yeah, I couldn't give a market order because it was ahead of the zone. So as this bounced up, I got in, snapped the photo as quick as I can, and then you had to sit through it, and it was tough to do. It was one of those things where it's either going to work or it didn't end up working out at that time. But as you can see, by the end of the day, it did break to the back of the zone, and this is a fairly wide zone. So you can't have a 12, 15 point stop. Just adjust how many contracts you have. So I said on average I do 8, but it's not like this thing I have to have 8. Like a lot of the times it's 8, especially if I'm using a Baldwin. But the other time it was much wider. I forget, it was on was it 2 trades ago. I had a 12-point stop, and I just cut the contract size in half. It's fine to do that. So it's also fine to, if you have a lot of conviction, like on this day I had more conviction at this major zone, be willing to get in again. If you take it at, this isn't a great day to, let me get out of a higher time frame chart because I make these charts for each day. Let's just say that you had the conviction that you had to get in for some reason. You saw a V pattern here. You said, hey, if this goes sideways and then dips hard into this zone, which I made ahead of time, you'd see why I made this zone as the main zone on the day, right? It has touching points here, 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 breakdown here, breakout here, V sideways, dip go. Also, if you draw Fibonacci from here to here, this is probably at least half the move. That's whatever, really good. So not that 50% is a fib ratio, but that's just a nice ratio. So yeah, you could say, oh, here's the double bottom. Why didn't you get in? It was nerve-wracking for me, so I didn't re-enter. Now, part of me wishes I didn't exit this runner the other day. I forget I had a good, at least intraday, it was a good 25% runner exit. But if I was willing to sit through this, I could have caught this, and then that would have been really awesome. Unfortunately, I'm not participating in this, but I did participate in some of this for Bitcoin, so that's good. Like I said, for me, this isn't a game of perfect. This is a game of, you know, excellence. I strive for excellence, not perfect. If you strive for perfection, you're never going to get in because you can't really capture winning trades without losses. Exits to me are a little bit more challenging than entries. You have three more chances not to extend to your targets. And I've been listening, doing a lot of inner work on letting my winners run and seeing what that means for me. Back in the old days, there would have been this instance to if this broke the high day to try to catch a breakout. No, I'm really good at catching these things anticipatory now. Um, and I'm getting better at letting my winners run, which can mean different things for different days in different contexts. It's not like a thing where, hey, I got in on this and I turned back, because it's so much easier in hindsight to go back at the end of the day or look at the day and say, why didn't I just hold the whole thing all in, all out? But really, it's like, what was the story happening? Now, you could say, are we now in trending conditions? Well, let's go to the ES real quick. Clearly, I don't need to look at the indexes to see this is trending price action. But at the same time, we also are coming up into a major zone, and if I didn't have a runner in, I would scale and hold up, because I do. I just don't want this to kind of BART pattern on me, reverse down, kind of snap back down, kind of like this, and then have to sit through this and whatever. Some people can do that. You can see there's been a lot of selling tails up here. These are just when basically the momentum is not going to be sustainable right now because we're in a sideways larger time frame pattern. Let's just zoom out. We're in we're in that mature balance that I talked about, but because we were oscillating tightly inside day, right? If I drew a triangle here, we're in an inside day. This is more than a week. All those uh, pre-market conditions that increase the odds of a trend that I listed yesterday again. Let's see real quick. Yeah, great, great. So, right, so we have a mature balance, check. We have volatility creating traction, check. Yes, we do. It's not, yes, we do. We have, no, we don't. Nope, not really yet. No, it's kind of neutral. Yes, 8, we do. We had a big move yesterday. That's fine. Uh, market moving news. Yeah, yeah. You got to thumb that one up too, Thomas. We had some market moving news today, man. Come on. You got to give number 11 some love, man. We didn't have a bull bear. We only need one out of all of these to have a little bit of an increase of an odds. The more, the better. So we had quite a few. So really hard to read, but really cool background before we put that together. That was cool. Yeah, so we had a lot. We had a lot. But even though we kind of anticipated this, the execution of it on low risk always has to be our main focus. At least for me, it is. Okay. So you can see that's kind of what I was not wanting to happen. Remember, I said, one of the principles is that a basic principle is that all trends end in balance, all balance end in trends. I'm not saying this can't sustain, but I just had a feeling that we have possible climax patterns. I didn't want to sit through a possible climax, which is, when I say trends, all trends end in balance, that's most of the time. They also can end in a climax pattern, which is that, basically completely, we just zoom out a little bit. We all know what they look like. They're just awful. Uh, oop, you think this thing's just going to keep going, and all of a sudden you look, here's the low of the day. You got a double bottom, and then you're like, "What the heck? Why didn't I just cash in on that?" And then if you moved your stop to break even, your runner, you just lost all that. So the possibility, right? Because I'm not big picture bullish. I'm intermediate neutral. At least before this move, now that everything's different now, we clearly broke a lot of structure. Let's go to the daily. And then we'll take a look underneath the hood for a second. So yeah, we broke structure, but this zone's green. I mean, it's no joke. We clearly it's not something I would if I had 50% or a whole position on, I would totally be scaled right now, and I would have something on to see if we could break through this. But because I only had a runner on, part of me's like, I just want this runner. Um, and we've already had this little mini selling tail that we might break through, but I mean, I don't know. It depends on how much. There's no really right or wrong way. It really depends on, are you willing to sit through a couple runners that come back on you a little bit more when maybe you cash out a little bit quicker intraday or the next day like I would, or do you let them stack more and just get that one or two that really takes off and you have 120 points and you're like, damn. I'm still working on patience to get that because like obviously I have a lot of my capital that I'm just sitting on that's staking. So that's like my long term blah blah blah, but that's not really a runner. You can't really conflate those two strategies. It's not really good. Um, but you can see this is not a joke of a zone. Yeah, I'm pretty sure I made a sideways up. Let's see. Here we go. Yeah, Thomas, he's hooking it up. So I just want to just double check my calls real quick. Yeah. So yeah, ES was sideways up. Obviously we have this bullish engulfing pattern. Why couldn't we creep up into the zone? And then we could scale into it if we had a chance. Plus there was market moving news. I really thought and then Bitcoin was I think sideways, which was earlier. It's a little later. Yeah. We closed really heavy into it. I mean there's a little mediocre thing. I mean, I was definitely more neutral, more in favor of the longs than the shorts, but I wasn't gonna say, oh, we can't go short now. It's like this to me was not as clear, but you could see oftentimes these markets are in sync. I use a lot of these other markets to see relative strength, especially for the ES. Like the Russell's really just been just lifting everything up, as you can see. I don't trade that, but that's one of the markets I do look at for relative strength. NASDAQ as well. So these are, yeah. So you can see those have been almost intraday even leading a little bit. So there's zone leads and things you can do where you can kind of lean on them. If you're, let's just say at that time that I wanted to get in, one of the reasons I did get in it, you might say, well, man, Matt got in pretty aggressively today, even before that news, which would have been great if I held it because then I could have scaled that runner and I wouldn't have cared if it went up or down and that happened to go up, maybe even 50% of it. You know what I mean? But let's go to that real quick. Excuse me. But when I did get in, let's see. I remember when it was. Excuse me. Um, it was right. It was around 11 a.m. Eastern. See, it was above the blue zone. Um, it was right here. So, it's aggressive. I'm getting in on this weak zone anyway. I'm making these in the morning, so I'm like, oh, should I just get in? Should I do this? So I always say, oh, let me get the zones. Even for me, I would do the zones. You gotta be disciplined with them. If you use them like I do. Um, but still, it was aggressive. It wasn't like we were, at least wrong chart, but let's get to here. It wasn't like we were, at least at that time of the day. Here we go. At least at that time of the day, if we were pushing into here, I would have bought. I wasn't seeing anything at the time. There was a momentum shift at the time that got me in, and then when the momentum shift went the other way, part of me's like, you know what? I'm all out. I don't want to give people a signal intraday that's at least not in a blue zone. Like I say, those wide double bottoms. Now you could say on this one, yeah, that was way better because at least you had the intraday price action confirmation. Was still above a zone, but that's not zones aren't made in stone. We're looking at price. Price action's king. That was the double bottom. That would have been a way better entry to take, right? Even though first test does have a best odds of a reaction, at least on a day like this when you're hovering above a zone, and we can get confirmation too if we go here. I think also at that time, as price was making that low at 11, you could see the market opened 9:30, and this is really horizontal with, this is not made a substantially new low. It's right level with the low of the day. But yet at 11, which is here, 11 o'clock, this is the low of the day. And it started at 9:30 here. So forget all this. That's in the overnight. That's not relevant because this is the AD line is not open in the overnight. It starts at 9:30. So really, it's a little tough with this, but it should be like kind of like this. You really want to pair them underneath each other. Shouldn't do that. Yeah, it's right here. So you could see this was the low of the day, and this was not making a new low. So that's a bullish diversion. So that's one thing that got me in. Kind of maybe reading the momentum stuff too much. That's another thing that got me in when it shifted at 11. When this thing blasted up before it even reversed, I was like, okay, that's a momentum shift. But then it's like I overread this, and then on the way down, because I wasn't at that zone and the news was ahead, I was like, it's not really my style to get in ahead of the news. So let me just be happy with that runner I had. So I just exited. But I play defense, and a lot of the times it does work. But then there's those times where I'm like, man, if I just was willing to take that loss, which would have been totally fine, uh, I would have stayed in this trade, and I would have been really happy right now because it was the correct thing to do. Because I slightly overweighting this a little bit was. I could see me overweighting this at the yellow zones, but when I'm a few ticks above a blue zone, that's a little too much. That's my notice that I start, okay, what did I do well? And this is sort of in alignment with, like I said, everyone here has uh the trade journal. By the way, I'm having a good friend of mine who's we just met. He helps me with a lot of things. He's creating a super Excel sheet because the Excel sheet that I sent you guys, the PPT trade journal, for Bitcoin, it's fine because if you can control the number of Bitcoin, no matter how many dollars in between, you have 5 Bitcoin, you have 100 point for your entry, your stop, it's $500 risk, whatever, that's fine. But for the ES, it's just going to give you, when it says $ risk, $ first target, second target run or whatever, finance, whatever. And it says it should be the dollar equivalent, but it's actually still in points. So what he's trying to do with the new sheet that he's working on is each point is going to be multiplied times $50 for that category. So you get the dollar amount, which is what we want. So I've been having to go back in my hand and do it by times 50, times 50, times. So I said, oh, I hope people aren't getting confused by that on their sheets because it says it should be equivalent to the dollar amount, but it's really to the point amount, and that's not right. So yeah, so that'll be one thing I'll send you guys. I mean, clearly this is powerfully trending. Let's just go back and just look at what's happening underneath the hood. You can see during that news time we had huge spikes in volatility expansion. Obviously, huge amounts of extremes, plus 1,000 to the upside, confirming the trend. And pretty much the AD line also shifting noticeably at this time above zero. It wasn't at an extreme or anything, but it was pretty weak. It wasn't like it wasn't above zero for any of that. But not oftentimes this is not telling us anything we don't know. It's just that when there's something off, like for example that divergence, or if let's just say it's super bullish and you think it should be open, but tomorrow it opens on a super negative, that's a disconnect. Because like so many stocks are up today, you think it would be opening. Especially if it opens up super high, like it gaps up, but then it's at an extreme, that would be a disconnect. That's not a divergence, but that's how I use this. And these I'm looking for if it's skewed. If this has been for the last couple hours, this has been skewed above zero, quite and extreme, which is signifying this confirming the trend, and this will probably be a pullback, the trend continuation. Obviously, if you really, I'm not going to break my. I was sideways up, so if I didn't get on a fade setup at the low of the day, I'm not going to buy a pullback continuation setup because this is betting that this trend is going to continue. I didn't really make that type of call, but you can see how if I did, the zones that I make are pretty solid because you can use the market. The zones are all based on market structure. So in lieu of market structure, you can use like a fib ratio on a pullback continuation pattern, but one of the problems with this is that pullback continuation patterns with fibs are really useful early in the day. This is at 407. So to get involved when the ES is about to close in less than an hour is pretty risky. It's not something I'd want to get involved in, but I make these zones and I'm like, oh wow, I'm not saying we use them in the context of top down, right? Daily call first, then you do the setup. Then if the setup is happening, it's just reminding me that this double bottom sucks compared to one, let's just say, technically coming back down here again, seeing this buying tail, you should put the order in right here with the stop below here, right? You got to give your trade room to work out. So middle to the back of the zone, you want to give your trade room to work out. I'm not saying you got to put it down to the next zone because if you get in at 40.57, I'm not saying you got to use a 17-point stop, right? But somewhere healthy in between where you're given this. It would suck if you got it if you put it in here and then you don't give your time trade room to work out, and then this thing comes down, stops up, and wakes you out. Could have happened. I never say use 2 to 3 points. If you can, if you go middle of the back of the zone, then you're getting closer to this zone. This is wide enough where it's like it may be hard to actually get it touching to the back. But if you can get good enough trade location, if you get it to the zone to the next zone behind it, that's going to increase your odds. And even if you're wrong, you're going to use the quad exit and feel it and possibly get out. You can see sometimes I play good defense and I get out pretty good and it moves against me, right? It'll go up. I'm like, why is he taking half off at 6 points and moving to stop the break even? Because I'd rather make a few whatever dollars than lose a full amount, $1,600. You know what I mean? So that worked out yesterday, but you can see sometimes playing too much defense, which keeps your hit rate high. Then you miss out on these news days. If I focus on these news days a little bit more, I'm going to catch one of them because they are awesome, right? It's just that the directional volatility isn't usually pure, meaning intraday. This if not that I'm saying go on a smaller time frame, let's go on to 15. But if you didn't even have any of these zones, let's just go to here. I'm not saying everybody uses them. If you didn't have a blue zone, I mean, you might have got stopped out quite a bit. I mean, how many people were buying the low of the day here using this as even the VPOC was giving you this, and then if you weren't using zones or you didn't have the awareness, you got stopped out. But my strategy was, hey, I'm just sidelining, at least for now, because I didn't want to be that guy. But if you didn't, and you went here and you used the zones that I made up, at least you had somewhere. Okay, Matt, this zone sucks. If I did, it broke down here, deeper in here is better odds, middle to the back, best odds. Fine, I missed this one. Crazy that I think I did. That's the one I did go in. That took a lot of just flow state. But I would have had to sit through a lot of shit. I would have had to get out here, probably move my stop to break even, would have got stopped out. I'm just imagining, like, when you back test it tonight, right? The trades you didn't take or you did take, go back and say, okay, what was the right trade? Could have got stopped out again. And then, or realizing, hey, I'll keep my stop. If I that POI, instead of getting out at 70, whatever price I got in, I think I got in at 68.5. It came down, and then when momentum shift up on a popped up, I got in here. I needed to see that a little bit momentum shift, especially if I'm getting ahead of the zone, and then the NQ was turning way ahead. So that was another reason. But yeah, if I did hold this, I might have had the wherewithal not to move my stop to break even, which sometimes I don't, because it's like, why would I buy double bottom again if I'm already like I'm already half off. Even if I get stopped out, I'm not going to lose money. It's just that if I move it to break even, I made more. So, but then I'd have to re-enter again, and I just like, man, I'm already in. It's like that emotional capital. Once you're in, it's like it feels good. I know we're trying to do the thing that doesn't feel good a lot of the times, as long as we connect those new neural pathways to make it happen. Like I'm getting better at holding my runners a little bit longer. I have that stat that says 90% of the time, these trend days end in the last hour of the day. But it's like for me, it's like I want to get on board that trend early, and unfortunately, that news event was pretty late in the day for me, and this was kind of a volatile event, although it was in alignment with this zone. This zone was pretty solid. And like I said, I already kind of talked a little bit about how I made that zone, about what I'm looking at, these touch points. But the more touch points you have, and then you look at what the volatility extreme could be or what the range potential could be, imagining it with your daily call can really help you stay disciplined and not get too whatever. Now, so this double top on a sideways. Well, I was sideways up, although I was like, well, I don't want to break my call, but technically, this was a short. It's not something you'd ever want to buy, right? Even though this could break out, it just has such horrible trade location. There was another reason that this was probably going to be not going to break out at that time. Let's go to that time real quick. That is a lot of the times when I'm reading this too, is I'm just getting the breadth of the market, and I often say, I remind myself, it's like just sometimes not the absence of strength, like the extremes here were not even 600. Okay, fine, they crept over 600 right here at that time. Just sometimes the absence of strength alone, right? The 80 line was, it was just a negative. It's just going in mediocre. It's not like a lot of stocks are up. Uh, Sometimes the absence of strength alone is enough just to make trade location just triumph over it. And you have to have the awareness to say, okay, well, this larger pattern may resolve itself. So if I do take this, it's a zone fade for a tradable reaction, because the larger time frame bias, um, at least from a bigger picture pattern perspective, would be at least neutral bullish, right? Because uh, if we go out on the daily, it'll help me not overweight that V pattern, right? I mean, clearly the candlestick, we had a bullish engulfing pattern pretty much that engulfed this whole thing. And just the way that it did it too, right? You could just say V sideways dip go. Look, just beauty principle V sideways dip. That's why that main zone was a dip there. V sideways, little dip, right? But wouldn't the main dip be here, right? That's that. Like I said, there's a lot of reasons why I picked that Fibonacci, but half the move. touch point. So the entry was solid. Because if I held that entry at 68.5 and quad it out, yeah, I would have got stopped in here. That would have been a bitch. There's no way I would have kept my stop above here. Then you would have to get in again. It's just like, yeah, okay, you missed some of this. Now you might say, well, Matt, once you see that big of a move, can't I just start buying up here? It's like, I'm sorry. Even though even though that's a pattern, and it probably will just keep rocketing up. Unfortunately, I can't just say buy there because what if it whipsaws down first and then goes up? Like, why would I tell you to buy at the high of the day? It's the most expensive time of the day. It's super late in the day, right? So a lot of these momentum setups contextually have to happen around early in the day before these trend moves happen, when there's a lot of risk on reward on your side, where it's worth taking the risk. Because let's just say you bought at the screen zone at 4126. Would you want to sit through 8 points? Or would you have gotten out soon and not held to your stop before it rocketed up? It's like, even in this case that it did work out, it's still bad to do. So we want to get in before the pattern, and it's okay if you missed it, because if you're trading at least two markets like I am actively, I at least had a runner in on the Bitcoin, and I caught the runner into the screen zone, so that was pretty cool. Now that it breaks this, you feel like, oh, why didn't I hold it a little bit longer? But like I said, I keep reminding myself there's really no perfect in this game. Like I could have reminded myself Bitcoin closes at 7, and most likely the trend will continue, especially it would reduce a lot of pressure on me to have any kind of re-entry up here. But like I said, there is no perfect. So guys, there's only two on here. So do you guys have any questions about, you'd like to ask, trade questions, anything about any of the trades I took, any trades you took, any zones?
Thank you for your answers yesterday. Um, was delightful, and yeah, I understood everything. Also took the trade. Yeah, that's great. Thank you.
Great, man. So you, let's just talk about that chart. So I was a little early the other day where at some point I said, oh, we'll have a pullback continuation pattern. I think it was this day where I know it looks like, oh, well, how could this be the intraday? It actually, like, I think it almost had like a hammer reversal, and I was like, could it be? So I was a little early, but like here it was this day, and then here's here's the pullback on this day. So this is the pattern that I kind of wanted to see, that would increase the odds that we are not going to have like basically a washout candle, which is like when we go straight line, straight line, straight line up, washout, straight line up, washout. This is a little bit better because it's like building structure through time. The more in time we go sideways. Um, yeah, thank you. Thanks, guys. I'm glad it helps. The more we could break out, going sideways, break out, going sideways. So this stair step pattern is way more conducive to a breakout. That's why when we pull back into this bounce breakout area here, which was the bounce breakout area, there was, into this, right? Hammer, about 50% of the range that we could get this pullback continuation, and that's what we got. And you sound like we were even really at, see, I have this little orange dot, that's the 200 hook from extremes. So we weren't even at that yet. Yes, correct. So exactly. So it's like, right, we just trended down sideways, reversal, right? Now, the larger time frame bias, because we've had of this bounce breakdown, it's still bearish, right? So the amateur's like, oh, here, I'm going to buy this as it breaks up. Well, there's been no time. There's been no balance. What happens? Gets rejected. Now it'll probably go sideways or sideways up, and it'll just start bouncing back and forth, bouncing back and forth, bouncing. Now it'll be up, sideways, right? But as I'm watching this, I'm saying, let's say 1, 2, 3, 4, 5, 6, 7. Okay, that's notable. That's a week. 8. Okay, 8, 9, hammer. Okay, 10. Okay, 11. Oh man, almost 2 weeks now. See that every day is increasing the odds that we're going to have a trend, and that's like that's like letting us know, right, that we just took out this whole 2 weeks in one day, sideways building structure. no action reaction down, then we're breaking out, right? And then it goes, and then once you have the balanced breakout pattern, then you have multiple time frames aligned to the upside. The short term's up, the intermediate is up, the big picture is still down, but it's not relevant until up here. So you have the short and the intermediate time frame up. So you have a bigger picture pattern that's up. You have your time frame analysis is you have multiple time frame alignment, right? So none of my days are going to be sideways or sideways down. It's like sideways up, up. Everything's going to be trending up now, right? Until it becomes, multiple green days up, sideways now, possible reversal day down, because we have this launching point here, right? We're going up into this problem area, right? And then we get this whole bearish engulfing that takes the whole day out. So probably tomorrow it could be sideways, and then this thing, because it took out so many days, could be a reversal. It's not like I'm super excited to buy here. You know what I mean? This could be going right down, right? And we get a sideways down. This no action reaction. It was done. There was no pullback. Right now, once we go here, right, you have this moving average. The bigger pattern is the bounce breakout here. So I'm not surprised that this bullish engulfing resumed itself, but it's like that's that sideways dip go pattern. And we kind of got it, that's what I call it on a mini level, the pullback continuation pattern here. Now, this would be a terrible place to buy because it's like, previous behavior. This is expensive, expensive. People sell, people sell. Will they sell this time? Probably not. But, if you miss the movie, miss the movie. There's like 30 something minutes left, we just have to be okay with it. And that's when that patience mantra comes into play. Like I'm fine with missing moves that aren't that aren't in alignment with my trade plan. So we have a question. It says, so more time. It says sideways. It builds momentum push up. Yep, that's correct. It says, do you count bars? You mean when on the execution on the double bottoms? Like, does it have to be a certain amount of bars? If that's what you mean, then yeah. I mean, I'm aware of it, right? Like there has to be a minimum of at least a couple. But then it's like, if you're looking at 15-minute double bottoms, then you start to realize that, hey, these little ones start to look attractive, and that's when you have to remind yourself this is a shitty zone. And that's when you can just zoom out real quick and say, wow, there's a reason this is yellow. This is really tight. It's like it looked okay to buy then, but it's like if you just zoom out and look at this whole thing, would you want to buy there, or would you rather buy down here where I set those automatic limit orders? Well, we're buying somewhere up here where it's like we're using pretty much the intraday low of the day. What you have is that it's contracting around that high volume node. So, and it's super mature, right? Just because it's contracting here around a high volume node, this has only been a week. That's notable. But now because it's been double the time or even a little bit more, it even has a way higher odds now that it's going to trend. And then on top of all of that, you have the market moving catalysts. Oh my God, everything was in alignment for some directional conviction, one way or the other. It's easy to say, well, hasn't it been? Couldn't we have another leg up? Yeah, that's what I was betting on, another leg up. I mean, I made a sideways up call for ES, but like I said, just knowing what to do on these news-driven days, and then dealing with the volatility is another story. That's where the Bitcoin runner was really at least I caught some of that move up into here. And now, ideally, I held it longer up to here, but I didn't cash in on that day. I mean, in hindsight, exits are like I said. I think exits are a little bit harder than entries, and as long as I'm getting 2R, 3R, and I'm consistently profitable, that's really what my goal is. My goal isn't to be the ultimate perfect entry man, because basically I have a couple different exit strategies. If I can sit through and have the wherewithal and have the emotional capital, which really I should, each zone is its own target, and obviously the getting in, getting out, entries or exits, it's like this would be a very aggressive short, right? So why wouldn't I want to hold it to the back of the zone on the runner? Well, I got my runner was here, just a little emotional probably, but profit's profit, right? So yeah, he said, why? I always think the entry is hard. Yeah, the entries are easy for me. I don't I kind of really know when to get in. Sometimes I'm getting in on those yellow zones and I'm giving hints, but most of the time I'm getting in on the blue ones. It's the exits to me are I use the stats and things to hold like it's for me it's like once I'm in a winning trade I feel really excited and I'm putting on real risk, so it's like okay, you start looking at your P&L, you might want to get in, even though I have to remind myself, okay, it's okay to be in a winning trade and have it come back down and be a loss if I'm really letting my winners run and holding to my predefined targets. Because if I redefine what my winning trade is, a winning trade now is not just something that happens to be in the green. A winning trade now is something that hits my logical first target, right? My logical financing target, rather, my 50% off point, which is that initial, at least on the fade setups, that counterintuitive bounce, which gets you in. And I'm okay with it coming back down and not being right. So it's a tougher psychology. It is, especially because on top of it, when I'm given the signals live, which have a really high hit rate in the channel, it's a lot of the times I'm thinking, well, man, if I was doing this one private, I probably would have had the guts to hold a little longer. I know it's hindsight 2020, but there is this thing like, oh, there's people shadowing me. There's this public scrutiny. I know, I don't know. I know I get sometimes I get PMs that people are shadowing us. I'm not saying anyone on the call is or whatever, but if that's the case, just know my strategies. If I get out here because I'm using this candlestick, or even here, let's just say I did take this. Really, that's the first target, that's the second target, and that's the runner. And if you do see momentum in your favor, you could say, okay, I'm going to push everything back and maybe even not quad out right now. Because if you have let's just say this trend day happened right. Let's just say this wasn't at 1400, but this was like the context was really in favor of a sideways up for Bitcoin as well. But it was early in the day, like around 9:30. Right, longer odds that this is going to hold throughout the day. I am going to look at that, say, okay, this is directional conviction to the upside, right? We had a huge candlestick that took out the entire overnight session, right? And now this thing's just gonna. I'm not going to recommend a short here, but it'd be really tough for me to tell you guys to buy there. That's completely anti our principle, right? Because I can notice a pattern and not say it's low risk. Because let's say I did say POI, right? And a lot of the times I'm using a ball exit, or I'm managing it at the same time. So I don't know exactly what everyone's risk management is because everyone has a different account size. So let's just say you got in at 23284. Um, you got in at 23284. You put your stop here, and then you got stopped out because it whipsawed back down, and you didn't have it below this next zone because it was too wide for you, and it was like this is a momentum play and it had to work or didn't. Like I said, the execution of these things are always on these momentum setups, which feel better, right? I mean, there's a couple momentum trade, right? Thomas, you trade more momentum setups, so if you want me asking, right, it feels good, but sometimes, right, as soon as you press the buy button, it's red. You're like, fuck, why'd I do that? You know, why didn't I buy when it's low of the day, right? When it pops back up. I sometimes even feel that when I have zones and this is red as it's coming down. And, you can lean on trade location alone. Trade location, out of all the edges we talk about, is absolutely king. Out of, the today's bias, the larger, like the today's bias, right, could be completely bullish by the end of the day. It was a complete, but at this point in time, right, it was just neutral, right? And trade location was king. There was low odds for sustained momentum, right? Because we were just going to drift back and forth. If you had the wherewithal and the gall, you could really be shadowing this all night and just scalping this zone, which is a pretty tiny zone. But if you're putting out six figures and you're getting a couple half percents or whatever, you're boom, 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 boom. I mean, but it's like, hey, we got to sleep. Really, the real play of the game was, capturing some of the news driven. So like I said, for people that are just starting out, just stay out 30 minutes before and after. But even today, even for a guy like Corby who trades these news things a lot, and me who's getting into them, and I do hit him sometimes, uh, we both simultaneously, without even talking, said, "Hey, we're staying out of this." So I didn't see a lot of edges on one side. Yeah, it happened to break to the side that we were a little bit more inclined to, but that's hindsight bias. You know, even so, I had my blue zone. Yeah, you had to be quick as a cat to get it. Let's go to, not that I like to execute on this chart, but just to show you how fast this was. Right, so you have a minute. There's another minute, and then you probably would have, who wants to buy there? If you waited a little bit deeper into it. So there wasn't it wasn't an easy day. Let's put it that way. But that's where that deeper runner comes into play, which is why I participated in some of that. Yeah. So I mean, what do you guys find the hardest about trading, and what can I do to help? Yeah, I have a hard time on daily calls to figure out the direction. Well, true, right? And you notice a lot of times me and Corby aren't making up or down. You have to have a lot of if you go back, there are some up, but you have to have a lot of conviction where you're like, I'm willing to trade breakouts. At least in my system, when I make an up or down, I'm saying, okay, I have so much things lined up. I have so much pre-market. I have so much conviction that if this thing breaks up, there is no low of the day retest for me to get a wide double bottom 60 meter on a sideways up. But it doesn't mean, like I said, I've said this before, if I make an up call, it doesn't mean that I can't make a sideways up. Uh, I can't fade a double bottom to get in and then have a breakup. So um so here it says I have a hard time on daily calls to figure out the direction of the entry. So well, often there is no edge in the direction, right? So I talk about bias and I talk about the daily call, but the bias contributes to the daily call, at least in my mind. But bias is directional control as well. But right now, at least on this week time frame, there is no edge at this moment in time. If we just look at this chart on Bitcoin, I mean, it's just neutral, back and forth. Neutral means we're uncertain who's in control, and if we're uncertain who's in control, you have these uncertainty bars where they're back and forth. Now, this was the first day where this was closing really heavy, where we were thinking, okay, well, maybe, if this closes really heavy and maybe even takes out most of this or even closes heavy at this, right? That could be this whole bearish engulfing idea. And we could get a sideways down and maybe get a gap close to this moving average. But what happened is the next day, I think what did I make? I made a sideways call for this day because we didn't close that heavy and there was still room to go. And I said, you know what, we might just be this might just be a double bottom play. And but because it closed heavy, I wasn't sideways up where this thing now had a bearish engulf this. That's why if you go back a couple of days ago, and that's why I timestamped them because I mean I start to forget what call you made, but I'm just going through my mind. I had these all in my daily call list, but I'm just giving you the narrative because all the narrative thread that I could talk about in the flow state is in those little categories, which I don't really even need to fill out because it's all in my mind now, but I still do anyway, right? So this double bottom, right? That was the idea that I was thinking, but because this closed so heavy and we didn't get action reaction the day before, this wasn't sideways up. We were just going to get a sideways day where it was going to be like, okay, a little bit of up and then not much sustained momentum where a little bit of shorts are happening, right? So, right, but that was the pause day where we needed, where I actually had more categories for sideways up the next day. No problem, Thomas. We're going for about uh we're probably going to go for another 15 minutes and it is just to see if Corby shows up. But if he doesn't, then I'll be wrapping up. But sometimes you just don't know here what the day is, and that's fine too. Like one of the things that really stood out in my game was like knowing when not to know, which is hard to do because there's a part of you that's like, man, I always want to trade. There's always that if you're sitting at the computer, right? If you have that 8 hour 9 to 5 whatever you want to do something mentality, but this is not a 9 to 5 sport. And yesterday I had a great trading day and it was only like a couple hours worth of concentrated work. That runner, I said, okay, I know that if I go out and do other things, get some sunshine, go out and do other things, I'm just going to hit that target. If I try to finesse it, I'm probably going to get out early. And you can see I like to read into momentum. And sometimes it really works in my favor. And once in a while, like a day like today where I got out early, it doesn't. But I know sometimes when it wouldn't, and that's when I knew when to back off yesterday with that. So, but like I said, on these days, it's just knowing that you're uncertain, that there's no directional bias, there's nobody in control on that time frame. Now, if I zoom out on a larger time frame, right? Let's just go to the ES. A little bit easier for the ES to see that even the short term, yes, the candlestick pattern was a bullish engulfing. That was certainly bullish category. But in terms of the time frame, the short term, which is the last couple of days, was up, down, up. That's neutral. And Then the intermediate time frame was down and then up. So it's just basically that's also neutral until we get confirmation that it breaks. So right, and the big picture, which is the last couple months, that's still down. So that's why, right, until we got this pattern, right, which is now the short term is up, right, and it's the start of it. So I'm not even neutral bullish. I'm bullish, right. You know, and as long as we clear this and we don't get any action reaction, we close that, which we did. We're going to be, let's just say it's 5 o'clock now instead of 4:30, and we're closing, or 4:35. Then we could even start to switch our intermediate time frame bias. Our big picture is still going to remain neutral, but I would just say, you know, here it takes practice, right? So now that this is starting to have time frame alignment, you could start making more sideways up and up calls, right? And it's not as if today was a pure trend day, but it's like, how often do you have days where they just take off at the open, right? Like, let's just like pretend you made an up call. How often do they just, you know, the new candle print of the new day and it just takes off up, 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 and then it goes sideways a little bit up and then just up the whole day? Those days rarely happen. Most of the time, you know, a fade setup even on a trend day works because, like, look, sideways up. And you know, it's like this was a sideways call which I made, but it's like, let's say you did stick to that trade for the ES, or at least the ES was sideways up, and you held this or whatever, or you faded this double bottom. But let's just say you even made a sideways call. Once you see the volatility, it's not like you have to go all out and then short automatically. This is not purely mechanical here. We're like I said, when I showed everybody this list real quick from the other day, which all these pre-market conditions that uh, increase the odds for a trend. Don't forget that I also said that once the market is open, the below or intraday real-time categories that confirm your anticipatory trade plan. Like we have to have, we're taking in this real-time data too, like professionally, right? Strong intraday pace, momentum, and strong volume. Clearly, we have that, right? Other markets are also directional. We have that, right? If trading the S&P, then the market should show signs of extremes. Plus 1,000, they skewed, spent over time, and the tick also extreme price holdings and the 80 line above 2,000, right? So yeah, that's that's what we want to see. But yeah, that just it comes with, is there any specific category Harrow that you're having trouble with? And if you can't type, you could if you can't unmute, you can type it out. Oh, you don't have a mic? Okay, well, if you have any specific questions about the daily call, you can type it out. But if you don't have any questions, we'll call it a day. Well, thank you for coming on, and pleasure having you in the channel. And you guys know where to find me. I'll see you guys in the room. Take care now.